Hello everyone, this is Abhijit Chatterjee recording a weekly session of Chartsarefun. This is for the week of November 17th, recording this on November 23rd in the evening. Last week absolutely saw a capitulation move in the cryptos. There was fear index that had tanked to multi-year lows. CNN fear index also tanked, and along with cryptos, towards the last part of the week after the NVDA earnings, initially there was a gap up. NVIDIA kind of shot up to 196, and then from there it just sold off along with the rest of the market on Thursday. And then Friday we got towards the afternoon, with of course options expiration, we got a bit of a recovery. So what we will look at today is we'll look at how the cryptos have really tanked after the top that the Bitcoin saw around early October. The last few weeks it has been steadily coming down, but last Friday it broke below a key level around that 100K, 99, 100K, and from there it absolutely tanked down to touching almost an 80,500 on Friday. So we look at what the cryptos are telling us. Maybe they are the leading indicator of the rest of the market coming lower. So we'll take a look at a possibility of maybe after a rebound, because the fear index had come down a lot, where S&P could be headed if it does collapse below a very key level from S&P at 6550. And then we'll look at NVIDIA also, the story stock, the one of the biggest percentage stocks and the biggest market cap stock, had hit 5 trillion not too far back, late October. Since then, now it's below 5 trillion, but we'll see what NVIDIA could be doing. And then we'll end with some analysis of the key cryptos. We look at Bitcoin, we look at Ethereum, we look at Solana, and we look at XRP, and in particular see what Bitcoin chart is telling us. And then one of the most leading cryptos beyond even Bitcoin and Ethereum and Solana has been XRP. We look at what the XRP chart is telling us. Without further ado, let's look at our blog site, chartsarefun.substack.com. We appreciate you subscribing to these blogs. It's through your email. You'll get the vlogs as soon as they get published. It typically comes out around 7 a.m. So you can see the last few blogs from the archive site. Our YouTube site is also Charts Are Fun. We really believe charts are absolutely a lot of fun. A lot of great insights come out of the charts, helps you guide your investment decisions. We do not provide investment advice, but what we do share is passionately the analysis of the charts, and then from there try to guide your decisions. So this is a Charts Are Fun channel. Appreciate you subscribing to it. And if you like the videos, if you could hit the like button. So today we're going to first look at, from the beginning of the year 2025, some of the key ETFs, starting with the Bitcoin's GBTC. This is Grayscale, one of the largest Bitcoin ETFs. And then the SPY, which is S&P 500 ETF, NASDAQ 100 ETF QQQ, small cap Russell 2000 ETF IWM, and then TLT, which is the 20-year Treasury, the TLT ETF, one of the most popular Treasury ETFs, TLT. So this is a perf chart. It kind of shows relative performance of these 5 core ETFs, and we can clearly see that Bitcoin from the beginning of the year took off, was at outperforming, while the rest of it were in the 0 to 5% range. Bitcoin hit towards the mid-January something at the level of 10 or 12%. From there it pulled back, followed the most of the other ETFs except TLT, which kind of stood positive for pretty much most of the year. TLT had gone negative only for a short duration in May, but more or less throughout the year has been steadily positive for the year. That's in purple. That's TLT. But then the markets all followed Bitcoin. Bitcoin tanked first. So if you look into February and you look at how far sharply going into February 24th, Bitcoin, which is in black, had dropped. That dropped a lot more than the rest of the indices, rest of the index built, like the stock index based ETFs. And then as Bitcoin reversed back higher towards late February, then it caught up with the S&P, NASDAQ, and small cap ETFs. And then together they all fell, kind of roller coaster into March, fell towards the early part of March, then recovered a bit. And then the bottom happened, as you know, on April 7th. We can see they all kind of bottomed at the same point. From there, the farthest and the sharpest recovery was Bitcoin. Look at how far from a negative minus 20, 22%, where they all kind of had similar negative performance. The green here is actually small caps. They had the worst performance of 21% year-to-date pullback. Others were slightly better than that. look at what the black line, the Bitcoin did, or the Bitcoin ETF GBTC did. It shot up. It went significantly higher immediately by the month of May. It had already hit 17, 18%, shot even higher in a couple of months after that. By August, had hit almost 29, 30%. And then it was leading as high as 32, 33% towards that October 6th top. From there, a waterfall decline. We can see how sharply GBTC has dropped. And in particular, last week, the week of the 17th, we can see this very sharp vertical drop. So last week was when it went negative for the year, and right now it's holding minus 10.62%. That's GBTC. We'll shortly look at the perf chart of the actual Bitcoin, which trades 24/7, and it since that Friday actually has had a bit of a recovery from that 80,500 Bitcoins early morning on Friday low. It closed near 85,000 and now it's hovering around 87,000, 88,000. So it did recover over the weekend. But that we look at when we look at the actual spot 24/7 Bitcoin price. But right now on the ETF doesn't trade at the weekend. So that's GBTC. You can see that as of Friday's close, it was down 10.6% for the year. The rest of it were all kind of positive so far for the year. The best performing is QQQ. No wonder with the AI stocks, all the $1 trillion plus mega cap stocks, all AI related, whether it's NVDA, of course, on the topmost, the Microsoft, the Meta, Google, they've all done quite well for the year, and they're all AI related and have literally taken QQQ up 15.86% for the year to date. Then in blue is the S&P 500, also as strongly weighted by these $1 trillion plus mega cap stocks. That's at 13.5. And then underperforming is, of course, small caps. They have kind of, with the recent last few weeks, the interest rate concerns, in particular, the jobs data for September came out, and it was a positive addition to jobs in September, and that caused the market to kind of expect that there's not any chance of a rate cut in 2 weeks. So when Fed does meet, which is on they're going to meet on December 10th, expect very low chances of that rate cut. So we shall see, what happens. But because of rate cuts expectations now being almost negligible, small caps have taken a beating, and we can see in the last week or so, small caps kind of underperformed, falling away from the S&P and the QQQ. But in particular, the fact that the Bitcoin ETF GBTC is leading the market lower. The key part now is to look at where do we think the rest of the market is, the stock markets. Would they follow and also score negative for the year? So in particular, we look at CNN fear and greed, and that hit extreme fear. Single digits is very rare. This shows you the historical chart. Around April, it hit similar levels in the single digits, and now we are back at that April lows, which, remember, April was a major low in the market, and we hit 6 on Friday. So the fact that the CNN fear and greed index hit single digits indicates extreme fear, indicates potentially market could be setting up for a bounce. So then if you look at S&P 500's daily chart, we see what we call as a right angle in the particular a horizontal base. That's the key support at 65.50. Horizontal base with an ascending set of higher highs. So that's what we call as a right angle broadening. It's broadening with the higher heights showing the broadening pattern, but right angle with a base, horizontal base. That breakdown, if we do get a breakdown from a 69.20 to the lows of Friday was 65.20, that's 400 points. Subtract 400 from 65.20 measures to 61.20. So this broadening top, if it does pan out, it eventually S&P breaks below 65.20 and picks up momentum. That's closer towards the 200-day moving average. That's 61.62, slightly below it. It measures to 61.20. So that's where we think potentially there's also previous resistance, which was the February high that we saw was 61.47. So this is potentially where we think the market could be headed if the equity market follows what Bitcoin's in indicator is, which we saw in the relative chart. Bitcoin is leading the fall, and then the rest of the equities could follow back and kind of also go along the Bitcoin's path. Now, another key variable that's predictor of downside in the market ahead is this indicator called the bullish percent index of S&P 500. This tells us what percent of S&P 500 stocks have bullish point and figure charts. And we can see that that has been weakening ever since its peak in May. 76.4% of the S&P 500 stocks were bullishly aligned. Every month as we go, it's forming lower highs, 76.4, 76. We hit a 63.8, 63.4, 61.8, 56.6. The recent high November was 50 and lower lows. The recent low was near 39.4. That said, if you look at what happened in the January going into February, we did from a 38, 39 have a bit of a recovery to the 50, and then the market dropped from February into April. We could be setting up for something similar. Notice that a lower low in the BP SPX, but the RSI is not at a lower low. Similar thing as what happened in the January timeframe. As got a lower low in BP SPX, RSI was the higher low. So, and from there, we know that the RSI climbed as BP SPX climbed. So we could be from a washed out level with, in particular, CNN fear index being at 6, expect to see some bit of a recovery rally into next week and maybe the week after. So that's something for us to see. And then if we get into, so 2 weeks from now, we will then go into the uh, Fed FOMC decision, and that could be when the market tanks if we kind of get a bit of a hawkish Fed not indicating any further rate cuts, expressing concerns of inflation and so on. And if the employment data is not so bad, we will probably get, because now that the government is open, we will probably get the November employment data coming out maybe by first week of December before the FMC. And if that's reasonably strong, then expect the market to perhaps sell off in the fact that there is no more rate cuts in the near term. That's what could cause the market to sell off. So that's something for us to look into. And this is early indicator, called a leading indicator, the fact that it's been printing lower highs, lower lows, indicating the S&P's got weakness ahead. Now, the key barometer of the S&P 500 and QQQ is NVIDIA, the king of AI, the darling stock. And look at that. Also has a similar, this is on 2-hour chart. Every candle is 2 hours of trading. Also a broadening, right angle broadening, a horizontal baseline at 176, 177, and then the rising tops of 184, 191, 185, 212, 211, 212 from where it broke down. So if I take a measured target of 211 to somewhere around, say, 172, that's about 40 points or so. Subtract 40 from 172, you're talking about 130. We may not get that low. If any, this 176 to 212 could be perhaps the measured. So 176 to 212, you're talking about 36 points. So subtract 30, 176, 140. So somewhere in that 140 or slightly below it is where we think NVIDIA could head down. We can see that the 50 period moving average, in this case, the period is a 2-hour, not a daily 2-hour chart. So every candle is 2 hour. That 50 period is getting ready to go have a bearish cross below the 200 day. So that 200 period moving average. So that's a bearish cross. Potentially, if RSI gets weaker as this breakdown happens below this key level at 177 to 173 on the low side, we could expect downward momentum to pick up. Now we're going to end with cryptos. In particular, fear and greed on cryptos had hit extreme low. It had hit 10, and we can see in the past lows, like in the early part of 2025, it didn't hit that low. And we can go all the way back to 2023. We haven't hit that low in the fear and greed like we hit on Friday. It hit 10. So that's extreme fear. And if you look at the pattern that's identified, taking Bitcoin out, this is just measured kind of a seed index measured on the altcoins. We can see that the pattern tends to be, and these are the kind of 4-year cycles, 2015, 2019, and then from to 2020 to 23, double bottoms happen in each of those. And after that, a breakout comes. And the breakout first comes out with kind of a climb along a trending line here. And then the vertical climb is the last part of it. Then again, a double bottom, initially a trending line of the breakout, and then a vertical climb after that. The green rectangle periods are when the vertical climb happens. And we are right about now have been climbing that trend line and now getting ready for a vertical climb like we saw in 2020, late 2021, and we saw in late, going into late 2017. So that, if that's a possibility, then perhaps in the next few months, we could have a bullish run in cryptos. So there's a possibility. That said, if you look at the Bitcoin relative to the altcoins, this is a perf chart again, and here this 24/7, so we can see values on 23rd November, which is today on Sunday. And we can see that right now it's hovering around close to 88,000, 87,798. That's where it is currently. And we can see that the weakest performing among the altcoins is Solana, which is in red. Solana has been overall at the beginning part of the year, the strongest was XRP and Solana was the second most. And then since then, during the collapse from the February through April, it kind of was the second worst performing. The blue is in this case Ethereum. So Ethereum was the worst. Solana was right above it. From there, Ethereum started doing very well towards the month of July into August. It started recovering. Solana continued to lag. And so far, Solana is at the bottom. Ethereum is above it, but still Solana is at the absolute bottom, down 29, over 29% for the year. Ethereum is down 15%. Bitcoin, which is in black, is down 5.99%, and XRP is almost flat at minus 0.36%. So expect XRP, which has been leading in green throughout most of the year, to kind of bounce back strong. So as we will take a look at XRP chart, and let's expect the Bitcoin chart also to rebound. So let's look at the hourly chart of Bitcoin. We can see this is the 21st on Friday. From that chart, low in the early part of 21st, it hit 80.5, 80,500, quickly recovered to 85,000, has been with strong volume. We can see that when the recovery came from 80 to 85,000 with very strong volume, there's a lot of buying going on. And now from there, it's a bit of an ascending triangle with a kind of a horizontal resistance level at 85,600. And so 80,500 to 85,600 is 5,100. Add that to 85,600, that measures to 90,700, which we know is where the 200 period moving average is at 90,000. So expect a kind of an upward move to continue into early part of next week and a retest of this 200 period, which is declining. So that should act as strong resistance. 90,000 is where we expect Bitcoin to be headed in the next few hours to days, we would say. So that's a possibility. On the other hand, what we look at the weekly chart, we can see that the breakdown almost came down from a double top, 124 into 126, and as the second top happened, RSI was at a lower high, so that was a negative divergence. That breakdown from 107 is, if you call it an M shape, 107 to 126, you're talking about 19,000. Subtract 19 from 107, that was 88,300, but it caved a lot below it. It didn't stop at 88,300. It went as low as 80,500. So that we can see was 80,500 on the week. Week is going to end shortly around 7 p.m. today. The week will end and then the next week will start. But so far, the lows of the week was 80,500. Right now, we are closer to the 88,000, 87,785. And we can see that this is a reversal wick. There's a whole in Twitter, when you read about posts, people say we got wicked. Wicked in this case means that you left a wick, a reversal wick. So Bitcoin got wicked last week. It intra-week had tested on Friday a low near 80,500, is now at least 7,000 above that from that lows. So we could potentially be indicating a reversal ahead. And if this is somewhat of a head and shoulder with a neckline around that 80,000, the left shoulder is 109,000, 80,000, it hit 74, but if you see around, it reversed always around that 80,000, went to 126, back to 80,000 testing, and now recovery. If we can get a test of the 100 to 107, 109 is potentially where the right shoulder could form, and then a breakdown, then that could effectively be a very bearish sign if you do get that head and shoulder breakdown. Because 80,000 to 126, you're talking about 46,000 is the height of that of the head from the neckline. So 40,000, if you subtract from that 80, right? Not 40, 46,000. If you subtract from the 80, that's like almost down to 34,000. So that's a big ouch if that does happen. Not so sure. We shall see. Potentially, we shall see RSI did not dip as low as 30. It kind of recovered at 36, can head back higher. We shall see what ends up happening with the Bitcoin. XRP, on the other hand, is got also a wick kind of a reversal. Intra-week on Friday had touched a low near 1.82, is now above 2 at 2.07. We shall see if it can muster a rebound and maybe test the 3.4. If that's the left shoulder, the head at 3.66, now a right shoulder at 3.4, which could be an easy, close to almost a double of where the low was at 1.8 towards 3.4. that's possibilities where we think the XRP could be headed for a near-term reversal. So with that, to sum it up, we can see that relative to the equity ETFs, the IWM, SPY, QQQ, and the bond ETF TLT, GBTC, the Bitcoin ETF, by far was the leading gainer for most of the year till when it peaked on October 6th, and then has been steadily coming down to the point that it is down 10.6% for year to date. And this what is could be an early indicator of the equity markets following Bitcoin lower is what is we were looking at. However, fear greed index on the CNN was at 6, as low as what you saw in April, which means extreme fear means indications the market could have a washout recovery from extreme oversold levels. And if you look at S&P, while it does have a bearish pattern, in this case, higher highs, which is broadening, but a right angle base at the horizontal base, that measured target from a 69.20 to a low at 61.20 is 400 points. Subtract 65.20 to 400 points takes it to 61.20, which is a test of the 200-day moving average at 61.62 and dip below it to this level that we saw towards January, and then at February 61.47. So anywhere from 61.20 to 61.50 or the 61.60 200-day moving average is where we think S&P could eventually head down, and that would say follow the path of what Bitcoin did in terms of the pullback down all the way to levels from where it started the year, which was around that 6,100 or so. So it could effectively negate the entire climb of the year as possibility for S&P 500. The bullish percent index is an indicator of a leading indicator of lower prices of S&P. We can see it printing lower highs, lower lows. Near term, however, it's printing some form of a recovery because of a lower low in BP-SPX from 42 to 39 with a higher low in RSI, just like we saw in January. So near term, for a couple of weeks, we could get a recovery like we got in the BP-SPX in January into February. And then from there, it tanked to lows all the way to 10 by April. We could perhaps get a revisit of those BP-SPX towards 20 and lower, towards the 10 level in the next 2 months or so. Near term, for a few weeks, we could get a climb back at a lower high, maybe below that 50 level, and then a breakdown potentially is possible for us to be looking into. NVIDIA, this is the 2-hourly chart. Every candle is 2 hours. Is also got a broadening right angle triangle top. That breakdown from 212 to the 176 is 36 points. Subtract 36 from 176 is 140. That's where we think if the breakdown happens below that key 173 level is where NVIDIA could head down. Near term, however, if you expect S&P to have a bit of a recovery rally, we could expect maybe NVIDIA to have a recovery rally as well. And then maybe from there, we can see what it does after that. But that's potentially where NVIDIA is. The cryptos, extreme fear with the crypto index at 10, below the levels we saw back in March and April. This indicates with the bullish view onto altcoins, the fact that in the past, every 4 years, there's been a vertical climb. So far, we've kind of had the upward trending line like we saw in this blue upward trending phase, and then the vertical climb comes. The vertical climb is yet to happen. If that happens, we could see XRP climb back, because if you look at XRP, this could easily go towards 5 or plus higher. 5 to 5.7 is where we think if that vertical climb comes for us to look into. XRP just happens to be one of the oils. The other oils are, Solana and so on. Anything that's non-Bitcoin is what's in this chart. And then if you look at Bitcoin's chart relative to the other major cryptos, we can see that it's not the worst performing. The worst performing is Solana, shown in red, is down 29.8, almost 30% for the year to date. If it could recover from here, maybe as you can see, this is kind of testing a level from what we see from the June timeframe to a recovery like this from a right shoulder, and then maybe a pullback. So we can see potentially Solana have a recovery. The others also kind of Ethereum could have a recovery. The strongest among the 4 cryptos is XRP, is almost down minus 0.3%. It could easily become positive and kind of have a move towards what we saw. It had gone as high as 70% for the year, by far the strongest. The next strongest was for the year to date. We saw that we got Ethereum hit almost 47.5%. And then we can see that towards August and then towards the early October peak, we got almost 32, 33% was what the Bitcoin's year-to-date gains were. So that was Bitcoin. The strongest was in the July timeframe, XRP going as almost as high as 70% year-to-date. Next was Ethereum going in the month of August, going as high as 45 to 46% year-to-date. Bitcoin, and then Solana hit as close as 30% a month in September, towards mid-September, and from there it has been tanking lower. So we shall see. Bitcoin's hourly chart shows the recovery from the lows on Friday. This is a sharp reversal with strong volume, breaking out above 85. 80 to 85 is 5,000. Add that to the 85,000, 6,000. You're talking about 90,000, 6,000, 90,700. This is the 200 period moving average of 90,000. We are right now at 87,900, almost 88,000. So expect continued climb in the next couple of days to test that level. And if you look at a weekly chart of Bitcoin, testing a key reversal level, call it a neckline. From here, maybe a right shoulder could form towards that 107 to 109,000, and then from there maybe break down. So that's what the bull should be looking at, an opportunity to lighten up some of the Bitcoin just in case it fails there. If it does take out to new highs, that's what the perma bulls are looking at. That's what Michael Saylor is looking at. That's what Tom Lee and others are looking at. They have targets closer of to 150,000 or higher for Bitcoin. That might be a very tough change, knowing that we only almost like maybe 6 weeks to the end of the year. But if any retest of that left shoulder level at 107 to 109 is looking a distinct possibility for Bitcoin in the near term. And XRP could also see a nice recovery. It is even possible that it could go retest the left shoulder at 3.5. It could have a nice recovery because we know that among the cryptos, it is the best performing. The one in green is XRP. So chance of it having a stronger bounce is very much a possibility. So XRP could have a bounce towards the 3.4 and from there maybe cave lower. So that's something for us to look at near term. With that, good luck investing. We'll talk to you next week. Thank you.